I'll try to present bank reconciliation mimicking a real life situation as much as possible. Imagine you report for work and you're given a cash book here and a bank statement like that. So at this time, I'm presuming you know that a cash book is a book of original entry, and the assumption is that we have only bank related transactions here. And then we have a bank statement which is supposed to show what's happening in our bank account. Now, in an ideal situation, the cash book balance, this one, is supposed to be the same as the bank balance, this one, but there's a difference. So what we try and do in accounting is, this difference is almost always normal, but to show that it's normal, we do what's known as a bank reconciliation statement. So we will need to prepare what's known as a bank reconciliation statement to show that that cash book balance can be explained, and the difference between the cash book balance and the bank statement can be explained. And if we can't explain it, then there must be a problem somewhere. Now, to try and explain that difference, you need to tick off the items. So you pick your cash book and your bank statement and you start ticking off to check which items appear both in the bank statement and in the cash book. So the 320 there, opening balance, is also there. There's R. Thomas on the 16th, R. Thomas on the 16th. There's Verity 140. So we've ticked off the 160 already. There's the 140 there. I can see there's the 140 here relating to the deposit. There's Psalms 470. I can't see that 470 anywhere here, so we'll skip that one. There's a 92 R. Johnson, 92 R. Johnson on the 31st. There's 110, okay, relating to Morgan, okay. And then there's a 90 to McCarthy. I can see a 90 withdraw, and again, I'm presuming you know when we're crediting, then you're in the cash book, then you are withdrawing, so it's been withdrawn. There's a 180 withdraw there, 180. And then there's a 200 to MPEC. I can't see a 200 to MPEC in the bank statement. And then there's a balance of 600. So after ticking off, you will notice that, okay, so the balance of 600 is the one we're looking at, so we can just circle that one. After ticking off all the items, you will notice that there are two items, this one and this one, that are not appearing in the bank statement but are appearing in the cash book. So I will shift to that a bit and say there are several items or several reasons why your bank statement might not tally with your cash book balance, and the main reasons include, so reasons: cash book balance is not equal to or may not be equal to your bank statement. Balance, number one, you may need to update your cash book because of what are known as direct debits and standing orders. So in case you had at some point told your bank that they should get money directly, maybe because the business got a loan and they should deduct money and send that money out of your account, you may not have accounted for this in your cash book, and that may cause a difference between your cash book and your bank statement balance. You might also have direct credits in case your customers have set up an arrangement where they send money directly into your account. That could also cause differences. There are also what are known as dishonored checks. And let's presume you have dishonored checks from customers. So you've made a deposit into your account, and you get a check from your customer. You make the deposit, you deposit it into your account, and then your bank dishonors it, maybe because or refuses to pay it because the customer doesn't have insufficient funds, or maybe the signature is wrong. What would happen is you've already recorded in your cash book that you've received the cash, but then the check has a problem, so your bank statement might not have that transaction, and that will cause a difference. Another possible cause of difference could be bank interest received. So the bank might give you interest, and you may not know that you've received interest, and you just see it on the bank statement. Another one could be charges by the bank, so you just realize, oh, we've got a charge on the bank. So all these will require you to update your cash book. But then there are also differences like that are caused by errors, either by the bank or in your cash book. So in your bank statement or on your cash book, once you identify those, you will need to reconcile them. Another common cause of differences are what are known as unpresented checks. So for instance, you issue a check to a client, you issue a check to one of your suppliers, and then they maybe don't send it for clearing at as soon as possible, and the period for which you are reconciling has arrived. You may find differences between what you have in your cash book, because to you, you've recorded in your books, you've recorded that the money has gone out, but then the bank statement doesn't have it. Then lodgements not credited as well is another cause of difference. So lodgements not credited, you deposit a check, but then maybe it hasn't cleared, or one of those kinds of things. So let's try and see how, based on what we have in our question, how we can reconcile these things. So we've noticed JSOMS has 470 and then MPEG has 200. We have more information about, ideally when you notice there's this difference in real life, you then want to find out more, talk to the different people involved, your customers or everyone, to see why these amounts are outstanding. And we presume you've already done that here, and you have this information. So you know that a check that had been paid to MPEG on 30th January had been paid to MPEG on 30th January, but then he deposited it in the bank on 31st, and then his bank did not collect the money until 2nd January. So here you have what's known as an unpresented check. And then the next one is for the 470. You've been given more information about that 470 over there, and the information you have is that although a check of 470 was received from JSOMS on 31st January and the business deposited in the bank on the date, the bank did not receive the funds from JSOMS bank until February, which is like a month after the month that you're dealing with. So in this case, you have a bank lodgement not credited. not credited, uncredited bank lodgement. So to sort this out, so all those transactions are causing this difference of a situation where you have 600 in the bank statement and 330 in your 600 in your cash book and 330 in your bank statement. So to reconcile that, what you want to do is, of course, you name the company. I'm going to presume that company is XYZ Limited. You could start with either the bank balance and then make adjustments until you find the cash balance or the cash book balance, or you could start with the cash book balance, which is what I would do. So the cash book balance in this case is cash book balance was 600, so I will pick that 600 and say cash book balance 600, and then you need to make those adjustments. So we know that we had a 200 which we paid out, but then the bank hasn't credited it. So if we're going to move to the bank hasn't debited it, so if we're going to move to the bank balance, we'll need to add this to our cash book balance. So we'll have unpresented check of 200 to make it 800, and then the next transaction that we didn't take into account was the 470, or that wasn't taken into account by the bank, was the 470, and we know that we made a deposit. We received a deposit by a client. We received a payment by a client, and we have deposited the check, but then the bank hasn't credited us because they haven't received the funds from the client's bank, and so we need to increase this. We need to reduce this to get to the bank balance. And so we'll go back and say less uncredited lodgements, of 470. When we subtract that, this will be 0. This is 7, 10 minus that's 330. So there we go. We've shown that the bank balance is the same, is reconciling with the cash book balance like we had right there. So this balance is reconciling with that balance. So the principle is just that you should move from your bank balance to your cash balance, or your cash balance to your bank balance. There's quite a bit of adjustments to make. I encourage you to go through the books and see all those adjustments, but the principle of bank reconciliation is just what you've seen here, and we'll see you in the next lesson.